And it's a very good morning from me here at Cheltenham. Hope everybody is well as can be with what's happened in the last week, of course, since our last live stream. What a year that was last week, that is, of course. Went the day well, as they say, but obviously lots have happened. Of course it has. I want to update you on all things mortgages with regards to what happened last week as well, because a ton of stuff's been going on, particularly for the CMAP syllabus if you're studying CMAP, or for the mortgage world if you're in the mortgage world. And as you can appreciate, I'm online here live from Cheltenham. Our business continues as it is because we're virtual anyway. An awful lot of mortgage advisors and brokers are now going completely virtual, which is absolutely the right thing to do. So we're live on YouTube, looking down there. We're pretty good on there. We're live here as well, which is great. So let's get cracking with what we've got planned for you. Hopefully we've got a bigger audience today as well, because everybody's at home, aren't they? Completely cut off from the outside world. So we're going to be broadcasting these as well as we can. So topics today for you. I want to talk about a number of topics to help you with your CMAT studies. I want to talk about the government stimulus, what they've been doing last week. I want to make it understandable for you. So if you get questions on it, you're able to answer it to your clients, because you will. And I'm going to pick up on how you're segueing your business model into an online model, because you need to, because you can't see people face to face anymore. Do you know, if I had a pound for every mortgage broker I've said in the last few years, you need to move on to the online model. And they've said to me, no, it's all face to face in my business. My clients will have to see me face to face. It's wrong. It's rubbish. They don't. Modern young people don't want to see you face to face. They want to deal with you, but you don't have to use face to face. Jump in your car and go and see them. That's a thing of the past now. Anyway, enough of that. Let's talk about what the Chancellor's been doing over the last few weeks or few days, in fact. We'll talk about banks, first of all, and stimulus. I want to talk about fiscal rules, okay, I'm going to call this one. Do you like that title? Fiscal rules, okay. Which is a bit of a sort of a pun, really, from the 70s, Chelsea rule, okay, kind of thing, Monetarist versus fiscal is going on right now, and you need to understand the difference between government policies and how it's moving, because it's also moving into modern monetarist theory as well, which is pretty cool stuff. So what's happened? We all know, of course, that the Bank of England reduced their rate down to 0.1%, Bank of England base rate. Now that, of course, affects all the economy, and all lenders gear themselves around that. Now that's almost 0%, which is absolutely ridiculous if you think about it, if you've been brought up on high interest rates. Now, lenders may well change their standard variable rate, they may not. Is it affecting their money? Yes, it is, and I'll tell you how that's doing that in a second or two. But it's not going to make a lot difference to their margins as well. What is also happening, though, is the Bank of England have started up their QE engines. Their quantitative easing is now back on stream again, and they're printing off money again, lots of money, and I'll tell you how that's affecting things shortly as well. And now we're getting into stimulus, because the government are stimulating the economy, and they're doing that now through fiscal policy. So what we need to be comfortable of is what's the difference between monetary and fiscal, monetary and fiscal. Now, when the government changes bank base rates and they expect that to make a difference, that's monetarism. Now, monetarism is dead now, let's be honest about it. You can't adjust interest rates very much anymore to make any effect to the economy. Interest rates just don't affect it. Money supply, controlling the money supply, stopping money going into the economy, contracting the money supply, contracts the economy. Opening up the money supply makes the economy boom. Now, I used to work in the 80s and 90s and early noughties, but not anymore. What they're doing now, though, is that they're moving into fiscal, and that's injecting money into the economy. And we'll come more onto that a little bit later on for you. What else has the Bank of England done? Well, the Bank of England has helped or boosted, let's put this up here for you, Bank of England. They're helping banks now to lend money. They made it a darn sight easier now for banks to lend money. They've got the new Sybils, which we'll talk about. It's not 40 Towers. Sybils, I'll come on to that later on for you. But they're basically helping banks to lend more money. They're giving the main banks some cash. They call it the term funding scheme, which is basically free money. So the banks and various other institutions are getting free money now, which they can lend out, because banks want people to carry on lending, or the Bank of England wants banks to carry on lending, which is a good thing, of course. They've also, not a lot of people know this one, they've reduced the capital buffer requirements. It sounds quite painful, doesn't it? So basically, they've stopped stress testing the banks so much. So they said to them, you don't need so much capital now to lend. So that's a big thing, actually. Not a lot of people are aware of that one, but they've reduced the capital buffer. There you go. Capital buffer, which means effectively that banks can lend more money. They don't need to keep so much capital behind the scenes before they start lending. And that makes a big difference as well. And they've cancelled the big stress test that they were going to do this year as well. So banks are pretty much free to start lending free money that they've got, lending freely to businesses, which is what they want to do. And that's cool. We'll come on to that a little bit later on for you and how it's affecting things. Back to this fiscal business again. The government, of course, are now starting to inject a lot of money into the economy. They're doing it through quantitative easing. They're printing money pretty much, and that affects things dramatically. They're giving the economy money. They're giving people money. They've announced, of course, the 80% of people's salary. Let's put that down here for you. If you're paid a salary which has been affected by the virus or the shutdown or whatever, they'll pay 80% of your salary. So that's for employed people. They're going to make some announcements today about self-employed people. Now, this is for salaries of less than £2,500 monthly, £2,500 a month. So it's most people's salaries, I would suggest. And that's for 3 months. So basically, they're picking up the wage bill of companies that have been affected by this. And the government are paying that. Why not? What they're also doing is they're deferring VAT and income tax. Now, I pay income tax January and July. I've got a big income tax bill in July. That could be deferred if I wanted to be paid later in the year next year. So they're helping out by giving money. Now, this money is coming from somewhere, and it's coming via fiscal. And what the government are doing is they're borrowing. They're borrowing huge amounts of money on the market through gilts and bonds. They're issuing bonds and gilts for this thing, which get bought by the world. People want to say to me, who's going to buy these bonds? But they're going to have to start issuing a lot of these things because they reckon it's costing 40 to 50 billion pound a month to finance this stuff. So what's happening quickly is they're going to issue gilts on the market. Who's going to buy them? Well, the Bank of England will buy them. There you go. The Bank of England will buy the gilts. They'll just print the money and do it. Isn't that just clever? That's modern monetarist theory, they call it. You can print as much money as you like, as long as inflation is not affected by it. Inflation is the only buffer now. So the Bank of England is going to print money, and they'll use that money to buy the bonds the government are issuing. So we're basically making money out of thin air. How cool is that? Now, obviously, if you carry on doing that, inflation will ravage in a few years' time. It may well do. But that's how the government are funding this. It's not a lot more difficult than that when you look at it. So that's how things work on the fiscal. So fiscal rules, okay. Fiscal is the one that the government are using. Let's talk about a few more policies for you in a moment. Okay, let's just finish that one off for you. I want to talk about the loan scheme now, and one of the other things they're doing for people and businesses to keep things going, because you've got to keep the economy going. We're probably going to go into a recession. A recession, by the way, is 2/4 of GDP that have fallen. And undoubtedly, we're going to fall this month, or this quarter, and we'll fall next quarter. So we'll be in a recession. Let's see how that works. Yeah, let's take a look at the new Sybils, as we call it. I love that phrase, Sybils. Now, not a lot of people know it's called Sybils. Now, Sybil, it's spelt that way, by the way. It's not Sybil as in Fawlty Towers' wife in the famous comedy. It stands for, and I will write this up for you because it's a hell of a thing, isn't it? It stands for the coronavirus, which is the bug that's around, of course. Business interruption. Here we go. Business interruption. What a word, isn't it? Loan scheme. Do you like that, do you? That's Sybils for you and I. And what this is designed to do is to give businesses money, a lot of cheap money. The government come up with a really good idea here for this one. So here's how it works. Now, behind the scenes, you have this organisation called the British Business Bank. There we are, the British Business Bank. Now, the British Business Bank, which not a lot of people have heard about before, the British Business Bank is a government institution, effectively, which has a number of partners. They've got about 120 or so partners, which happen to be the banks. And the whole point about the British Business Bank is it unlocks finance to give to British businesses. That's what it's designed to do. It's been around for a while. So the whole purpose is it gives money to British businesses to help them keep afloat and do well. Now, obviously, this situation that we're in now has required that British businesses are injected with a lot of money very quickly. So the government, therefore, have introduced this CBILS, which is obviously Coronavirus Business Interruption Loan Scheme. And what happens here is that the governments will allow you, if you run a business, to go to a bank or a participating bank, and they're all doing it, and to borrow money from the bank from a term of 3 months to 10 years. So some of the details for you. You can borrow some money. So you go to your bank and you borrow. You borrow a sum of money, which is available to you. There's a fair amount of money you can borrow, depending on the size of your business, etc., etc. You can borrow from 3 months all the way up to 10 years. So you have to pay it back. Of course you do. It's daft if you didn't. And that's the term. So you can borrow for 10 years. Now the good news is it's 0% interest for 12 months. So if you ran a business, whatever size of your business, you could borrow some money at 0% interest, and if you want to, you could pay off your credit cards for 12 months because there's no interest to pay on it. And of course, the banks have been given this money through the term funding scheme. Therefore, they've got plenty of cash to lend on this. Now, the best news is the government are going to underwrite 80% of the loan. So that comes from the British government. In other words, the banks are not taking any risk, really. Obviously, they'll look at your business and make a decision based upon that. But because the government are underwriting the risk, then, of course, it allows you to do that. And that's great. It's a pretty darn good thing. Now, who is it eligible for? Well, it's eligible to UK businesses. So you've got, obviously, the clients that the British Business Bank is designed for. Your turnover has to be less than, 41 million. So, it's a pretty sizable company, of course. And you've got to be liable for the debt, of course, as well. And you've got to be in a fair bit of trouble. You've got to be able to prove that you need it. And the terms are all very attractive. So that in itself is designed to boost businesses who've been affected by the virus, gives them money, they can borrow it quickly, put it in the bank account, they can keep afloat. And if they're using the 80% to fund salaries as well for people, they should be in a good condition, because what the government want, of course, is they don't want businesses to go bust. They want us to come out of this, and they want businesses to be up and running and good to go. So I think the CBILS, as they call it, is a very, very clever system, and one that all businesses should seriously consider applying for. Even if you just borrow it and then you use it to pay off something else in the meantime, and in a year's time, and you set it up maybe for a year, because it's 0% interest. And I know interest rates are very low, but of course bank lending is still quite high. Even though the bank base rate is 0.1%, banks still charge 6, 7, 8% for unsecured lending, which is absolutely ridiculous, isn't it? I know it's margins, I get all that, but that's the way it goes. It's all profiteering, isn't it? So, CBILS, hope that's been useful. Bye. Hey, there we are. A couple of quick things for you then, before we wrap up our live stream today for you. Hope everybody's well, by the way. Keep safe. Yesterday, apparently, was more visits to the countryside than ever before in this country. More people flocked to Snowdonia than ever. It's just getting daft. I think old Boris is going to ping a few rules and regulations, send out the army maybe to stop us from all going out. We'll wait and see. Okay. Mortgage payment holiday. Now, you probably had some questions from your clients about the mortgage payment holiday. So let's talk about how that all works, because people think it's a freebie, but it's not. Now, as you know, of course, the Chancellor said in one of his announcements last week that if you want it, you can get your lender to give you, to let you off your payments for 3 months on your mortgage. So it's a great little publicity thing, wasn't it? So what happened is that the Chancellor contacted the big banks, CEOs, and said, look, we want you to give your customers a 3-month payment holiday. So just do it, okay? Otherwise, we'll tax you or something, And the banks all adhered. Of course, they're getting plenty of money from the government to look after things. And the banks, building scientists, really do want to help people anyway, because it's the right thing to do. So what happens then is that you phone up your bank, or use the internet, whatever is your preferred choice. So you get on the phone. There's my old-fashioned phone for you, and you say, please, Mr. Bank, can I have a 3-month payment holiday?
So you say 3 months payment holiday. The bank says, yes, we can do that for you, payment holiday. And the bank won't ask you too many questions. They ask you to self-certify the fact that you're eligible for it. There's no eligibility situations at all. And they'll give you 3 months off your mortgage. And that's great. But what they'll also do actually is they'll look at other things for you. You'll ask for a 3-month payment holiday, but the bank might come back and say, well, actually, would you prefer to pay interest only rather than having a complete payment holiday? In other words, not pay any capital back on your payment, but just pay interest. Now, last night I was talking to a couple about their mortgage and we were working out their monthly payments, and their monthly payment was about £600 a month. That's capital interest. Now, of that, only about 50 quid was interest. It's quite interesting, actually, because interest rates are so low, aren't they? Most of your monthly payments are capital. So if you go interest only, that reduces it quite considerably. The other thing they might say to you is that, actually, do you want to extend your term instead? Do you want to extend your mortgage term? This is why the banks want you to phone them, you see, and they've got people all trained to ask these questions. Do you want to extend your term instead? Now, say, for example, you've got a mortgage term of, say, 12 years remaining, and your monthly payments are geared around that. If your age allows it, they'll extend it, say, to 25 years or 30 years. And this, of course, reduces the monthly payment quite considerably. So that might be a better option. Alternatively, you just go, wham, bang, no, I want 3 months complete free of my mortgage. And the lender will do that for you. And the first thing is they won't penalise you on the credit searches. They're not reporting these to the credit reference agencies. So it won't affect your credit score at all. So you want to make sure that's the case. And they'll let you off the mortgage. And what happens then is that you have to pay it back. So what happens is the 3 months you let off, there's going to be unpaid interest and unpaid capital. The unpaid interest will get added to your outstanding balance at the end of the 3 month term. And they'll recalculate your monthly payments. They might be slightly higher. They may wait to the end of the year to do that, they may not. So for example, if you had a monthly payment of, say, £600 a month, and £50 of that was interest, at the end of the three months, another 150 quid goes on top of your mortgage balance, which, by the way, wouldn't have come down because you're not making capital payments either. So the lender will recalculate everything from their computer system and your mortgage payment will go slightly higher. They might end up extending the term for you to capitalise that as well. But you do have to pay this back. It's not like a freebie. Don't think that for a moment. So that's what happens to it. What probably will happen is if you go for a 3 month payment holiday, 3 months later, say, what are we now, April, May, June, say June time you phone up, can I have another one, please? Can I extend that? And banks will say yes, they will. They will say yes. They'll probably give you another 3 months if you need it. And why not? If you're struggling to feed your family and all that kind of stuff, you use these things because they're designed to help people. And okay, another couple of quid on your mortgage payment when things get better, it's not a big deal. So that's probably what will happen. They've also said that they are having a moratorium on repossessions. So if somebody's not in good situation with their mortgage, they're not going to repo, which is good. And I think, by the way, to get this, you have to be up to date on your mortgage before you get given this payment holiday. Final thing on this one for you is that the landlords or the buy-to-let market also have the ability to get a 3 month payment holiday, because the landlord has to phone up, self-certify that their tenant is unable to pay the mortgage, and therefore they can get a 3 month holiday on their buy-to-let mortgage. Now, what they've tried to make happen here is they've got the landlord to promise that they're going to let the tenant off the rent. I think that's a good thing. So, for example, if you've got a buy-to-let property and the tenant can't afford their mortgage, because tenants are just the same as homeowners, they still have income that's been stopped, and the tenant can't pay their mortgage, or their rent, I should say, the landlord gets a 3 month moratorium on their mortgage payments, and they pass that on to the tenant, who doesn't have to pay rent for a period of 3 months, maybe, or whatever is the situation. That's what they're wanting to happen. Whether that happens or not is entirely up to the landlord. Whether he or she's a bit of a money grabber, you don't know, do you? But one would hope that everyone's pulling together with this. This is about the human race. Hello, let's get this quite sure on that one. This is affecting everybody, flesh and blood. Doesn't matter how rich or poor you are, the virus will affect you. Health levels everybody. We need to remember that. We've come out of a boom economy. There's people making a lot of money in the boom economy. There's people not making so much money. Still people going to food banks. This virus levels everybody, and I think that's a good thing. Absolutely do. So landlords, if you do get this 3-month holiday, let your tenant off the rent. It's the least you can do to help things out. Okay, that's that. I might go to my bank and get it organised. Why not? We can all do these things and get extra money for us all along the way. Hope that's been useful. Great stuff. Okay. Let's finish off then by talking about just a couple of minutes. Maybe we'll do some extra live streams on this topic. If you are a mortgage broker and you're broking away, or financial advisor, whatever it is you call yourself, the only way you can talk to customers is by this stuff here, by video. Now I'm doing a live stream here, as you can appreciate. It's live streaming to YouTube. You might be watching on YouTube. It's not the best of video on YouTube because they tamper with it. There's HD versions on our learning management system. This is the only way I can talk to my people. I've been doing this for years anyway. It's not new to me. As a mortgage broker, you need to start doing this kit now with your clients. Now, last night, I spoke to a young couple about their mortgage. I mentioned to you, the £600 a month one. And we did it via this system. You know, I had they're on the video there, on the big screen down there, their images. There was a young couple, and I was chatting to them just like a mortgage advisor would do. There's one instance actually where the girl was talking quite a bit and the young lad was quite quiet. But because I had him on big screen, I could see his face. I could see his expressions. And I said at one point, I said, you know, you wanted to ask me a question, or you look a bit concerned about that? Hey, it's the same as face to face. As long as you've got a decent screen with their image on it. I mean, I got people faces the same size as you and I face to face. You can read facial expressions. We're all good at that. And if you've got a decent HD video, you can do that. So think about migrating your work to an online system. I'm going to put a load of videos online for you about how to do that, both the tech and also the skills that you need, because there's a lot more skills involved in talking to customers via video link. But you know, if you are running a mortgage business, you do seriously want to think about, and obviously now, you seriously want to think about maybe moving your world over to that. Because the world is changing. This isn't just going to go away. We're going to forget about this. It's going to change everything. It's going to change the way we see things. A lot of people are suddenly realizing that video and Skype and video calls actually do work. Hello, they do. And therefore, they're thinking about moving their business online. So make some plans. Talk to me about it if you want some ideas, some help or whatever. Make some plans. Make your business virtual. Use this as a springboard. But other than that, guys, keep well, keep safe, keep isolated. Only go out if you have to. I believe the parks and the national parks were swamped with people. Go out for exercise, of course, sure. Let's pull together on this one. People are dying on this one. Be aware, people are dying on this. There's elderly dying in hospital. The NHS, of course, need to be protected. We know all that. It's all logically done. Boris doing a great job. He's persuading us. He's using behavioural economics to persuade us to do these things. If we don't do it, he's just going to storm off and make it happen. Have the army out there patrolling the streets. Don't want that. It's not the way we rock here in Britain. But let's keep safe, keep healthy. I'll be back online next week for a live stream. Might do a few more of these things for you. Keep in touch with you all, and email me if you want any questions. Just ping me on LinkedIn. My LinkedIn is www.paularcher.uk, youtube.tv. You can email me, paularcher.com. Our CMAT bootcamp is still open for people who want to buy into that. If you've got plenty of time on your hands to study, which you probably have, then our bootcamp is at archertraining.com, and you can find out more information about that one. Hope that's been useful. See you all next week.